Making money trading options involves speculating on the price movements of assets like stocks without actually owning them. Options are contracts that give the right, but not the obligation, to buy or sell an asset at a set price within a specified time frame. This flexibility allows traders to profit in both rising and falling markets if their predictions are correct. To start, it's essential to understand the two primary types of options: calls and puts. A call option gives the right to buy an asset if the price rises, while a put option gives the right to sell an asset if the price falls. Traders can use these options to speculate on price direction or to hedge against potential losses in their portfolios. Successful options trading requires research, strategy, and risk management. Some traders use technical analysis to predict short-term movements, while others rely on fundamental analysis to gauge long-term trends. Strategies like spreads and straddles allow traders to limit potential losses or profit from volatile markets. Managing risk is crucial since options can be highly volatile. Limiting position sizes, setting clear profit targets, and using stop-loss orders are essential to protect your capital. With practice and a disciplined approach, options trading can be a profitable venture.